In this meeting from Peltz International, I'd like to turn things over to Lois Peltz, the founder and moderator for our session today. Lois, it's all yours.
Thank you, Ken. Well, I'd like to welcome you to today's webinar on investing opportunities in sports. As you know, it's been a very active area lately, and we're going to explore some of the reasons why. We have with us in Washington, D.C. He's very experienced in sports and entertainment. He's worked with professional athletes and entertainers for many years, handling their legal needs, acting as their trusted advisor, as well as deal maker. Our other speaker is Ron McCray, who is a private investor and has been a co-owner of the Boston Celtics since late 2008, 2009. He has also been chairman, CEO, and president of Career Education Corp. And prior to that, was the chief administrative officer at Nike. He's currently an advisor to RLJ Equity Partners, a private equity firm, as well as 645 Ventures, early stage high-tech venture capital firm. He is a Senate confirmed presidential appointee of the Federal Retirement Thrift Investment Board, and he is also serves as a trustee at Cornell University. And a very special thank you today to Ballard Spa, who is today's sponsor. They are a very large national law firm with over 640 lawyers in the United States and over 15 offices. As Ken mentioned, we'd like to get your comments and thoughts throughout, so please use chat throughout the session. If we don't get to your questions, we'll try to address them later to you. So we're going to start with Ricardo. Ricardo, to give us kind of an overview of where you see sports investing today. How do you see the current landscape?
The current landscape has been extremely active, especially this year in Europe and in the United States. In Europe, we had the Chelsea Football Club sell for $5.3 billion, which is the largest sale of a sports franchise in the history of the world. Also in June of this year, we had the Denver Broncos of the NFL sign a sale agreement for $4.65 billion with the Walton Penner Group, making that the largest sports franchise sale in North American history. So it's been extremely active this year. I expect that to continue into next year and into the future.
Good. Would you describe it as a buyer's market or a seller's market?
Well, I will say this, because it's a long-term investment and because there are only a finite amount of pro franchises, it makes it exclusive. And so that lends itself to being a seller's market. So even whenever the opportunity arises, you end up having the seller having the advantage. So I'll give you an example. So Donald Sterling once owned the Los Angeles Clippers. For anybody who's an NBA fan knows the Clippers weren't that good, never have been that great, never won championships. However, he got in trouble for things that he may have done and said outside of the court and was forced to sell the team. His punishment was the team still sold for $2 billion despite that organizational cloud and distress. Steve Ballmer ended up buying the team for $2 billion. So you can imagine that if you've got that much turmoil going on around a club and it still sells for $2 billion, it's pretty much a seller's market.
Okay.
And he bought it for less than $500 million.
Absolutely.
Hundreds of millions at most.
Yep.
Maybe less.
Ricardo, maybe give us your thoughts on where you see the largest investment opportunities, both in the United States and in Europe.
Sure. Although there are many avenues for you to invest in sports, we may touch on some sports betting, sports memorabilia, and things of that nature. The largest opportunity still is within buying a pro franchise. It gives back remarkable returns. And obviously, sometimes if it's a long-term investment, it's going to be an unrealized return, but the valuations are astronomical. In 1999, Ted Leonsis purchased the Washington Capitals for $85 million. And the Washington Capitals are a club in the National Hockey League. 2 years later, in 2001, Forbes estimated that the value of the team was at $930 million in just 2 years. That 485 or $285 million or $45 million unrealized return is more than double what he would have received if he had put $85 million invested it following S&P 500. So it just goes to show that the returns are astronomical for these things. And it's not just for the NHL either. It's the same for the NFL. In 2002, the average value of an NFL franchise was $423 million. By 2020, that average had risen to $3 billion. The world's most valuable franchise, sports franchise, is the Dallas Cowboys of the NFL, and their valuation is at $8 billion. Jerry Jones bought that team in 1989 for $150 million. So it's astronomical, the type of returns that you may be able to receive if you were to sell a team. And that's not just for the NFL and NHL. It's also the same. The same is true for the NBA and for Major League Baseball.
What are some of the factors determining these valuations?
It's interesting because it comes at a time, these astronomical rises come at a time where most of these franchises are reimagining their operations. So they're kind of adjusting on the fly to enable themselves to continue to see these type of returns. So I see three factors. First is revenue diversification. You notice, and I don't know, in the news lately, it's been sports books being available within stadiums and arenas. More stadium owners and franchise owners are having live events and using their stadium as live event venues. You also see that some of the same team owners or ownership are now going into esports team ownership. The second factor, I believe, is technology engagement. You see franchises using fan engagement where they are now offering exclusive NFTs, non-fungible tokens, to their fans and to people who want to be involved with the team. Secondarily, they're also using direct-to-consumer streams. They're going direct-to-consumer, whether that means they can view games live or they're privy to team-oriented exclusive opportunities. The third, and probably the most important, and which probably should have been listed first, are broadcast deals and TV deals. Over the past decades, those numbers have been out of this world. Amazon just paid $11 billion just to air Thursday night NFL football games. So with the emergence of streaming options, other linear options, it's forced organizational agility for these franchises so that they can now do direct to consumer. Another thing that I'll point out is it wouldn't surprise me if we start seeing clubs control their own media sometime in the near future. And I think that could be the wave of the future. So the three things, again, it would be revenue diversification, technology engagement, and TV deals, broadcasting deals.
Very good. So Ron, let's turn to you. And maybe you can tell us about your experiences with buying into the Boston Celtics, what motivated you, what was the process like, any surprises, any challenges?
Yeah, thank you, Pels and Lois and Rick, and thank you, audience. In terms of my motivation, I had been an athlete many pounds ago and many years ago. And so the sports world was an interest. I had become an executive, an investor. And so the two kind of came together over the years. In 1982, when I was a law student, the first African American bought a majority ownership position in the Denver Nuggets in a major league franchise. It just so happened that he was based in Boston. And I had the opportunity to meet with him, and I learned about what he did, how he did it, and what it meant. And so in the back of my mind, since my second year in law school, I thought one day that might be something to do. I like the combination of sports. I like the competitive aspect of sports and business. I have a personal view that athletes should be strive for being less than just entertainers and should be owners of their destiny. And that was part of the motivation. In terms of the process, I had been poking around in the 2000s for an opportunity. And quite frankly, one just fell into my lap when I learned that two good friends of mine had been participants in the purchase of the Boston Celtics when it was transferred in 2002 or so, the early part of the century. And one had been a professor, mentor of mine, and another had been a contemporary in school. And so we re-engaged, and I met the general managing partner. I had the endorsement of some of the other partners whom I knew from sports in college. And we sat down. The chemistry was good and immediate. I met the general manager, Danny Ainge. Kevin Garnett was recovering. He was on site. I liked the facility, and I decided that I wanted to be a part of it. I told the managing partner that if they would have me, I would be interested in joining, and he felt the same. We then talked about price. I got a range, told him I preferred the bottom end of the range, and we got our lawyers and accountants together, and within 6 to 8 weeks, we had a deal.
Great. And how has the experience been?
The experience has been, it's been multi-level. It's been fun. I like sports, so that's always fun. What I didn't anticipate was something that Rick touched on, was the positive benefit to live sports valuations that disintermediation of the media was causing. And so when I bought in the late the 2008, 2009, live TV was just beginning to be eviscerated by streaming, TiVo, and those kinds of things. And advertising money was just starting to run to live programming like sports and news. And so I was a fortuitous beneficiary. We have been a fortuitous beneficiary of that secular change that I think is going to continue for a while, as people tend to watch live more things like sports and news over your conventional, let's say, situation comedy, the way people used to. So that was a nice experience. Nice to experience it. I'm in the media anyway, and in the media business anyway through other investments, and so I learned by watching that dynamic. The fact that my partners were friends or friendly since I was in my 20s was helpful. I knew them. Every franchise, like any company, has a culture, and I was comfortable with the way they work, the way they think, their ethics, and so forth. So that's been good. Another thing that I didn't anticipate was mentorship. You think about the NBA, most of the players are African American. Most of the players came up in single family homes, don't have fathers. Most of the players don't have much education. Most of the players don't have lots of cash flow, but don't know how to manage wealth. I'm not familiar with it. And so here I was, this Black guy who looked like them, who had my own athletic, high-level elite athletic experience, I didn't need any. I was one of the few people who didn't need anything from them. I was one of the few African-American men who walked around in a suit that they saw. And so I developed lifelong relationships with some of our players from whom I learned a lot and who I think felt they were benefiting from my experiences as a father, as a husband, as an investor. And it's been good. And that's not something that I had anticipated when I initially bought in.
I guess this is a question for either Ricardo or Ron, but could you discuss some of the price points, like what for an investor to invest in a minor league or major league or soccer teams, what are we looking at generally?
Well, it depends. I mean, the price point, if you think about it, the price points are going to be much higher for an NFL franchise, where the valuations are in the billions. And for a minor league team, they're going to be much lower, where the valuation might be in the tens of millions. And then thirdly, you have the what I call the startup professional leagues like lacrosse, soccer. Men's soccer may be more advanced on the professional level, certainly women's soccer. And so the price point, like anything, depends on the valuation. I would say if you want to play in the NFL league, you're talking about hundreds of millions. Maybe there may be a slice which would be hard to get at tens of millions. That's what you're talking about. You're talking about a long-term holding. And then if you go to the far end of the spectrum with the startup franchises, you're probably talking about thousands or tens of thousands. So that's the range, tens of thousands to hundreds of millions. And so, as I look at franchises, I have to consider what price point, number one, I want, and number two, what I believe the trajectory will be for that at similar valuations, I would not be inclined to invest in the NFL today if I had the opportunity than I would in 3 or 4 or 5 other sports leagues. Oh, it's certainly not Major League Baseball. My personal view is that Major League Baseball doesn't have the runway that some other leagues do. But that's me. So.
Okay. Another area, and I guess Ricardo, maybe this is for you, private equity firms are getting more involved in a big way. I guess last year they invested close to $2 billion. Is that continuing this year? Is it good, bad? What are the implications for private equity funds?
Well, it was estimated that in 2021, the private equity breakdown was over $1 trillion in total deals last year. And as you stated, and I think we talked about this previously, about $2 billion of that was spent investing on United States sports franchises. I do believe that that's going to continue. The NBA, Major League Baseball, and MLS have all begun to allow private equity investing. So as recently as last year or last summer, if I'm not mistaken, Major League Baseball's commissioner, Rob Manfred, had made a statement regarding private equity investors. And he had stated that because of the rising values of these franchises, the capital structure has become more complicated. And having a fund act as essentially a passive equity investor has helped facilitate these sales transactions. So now you have firms starting funds to attempt to get minority stakes or shares or ownership of professional franchises because they are attracted to and drawn to the economics of the sports leagues. I've already talked about the television deals, globalization. These are factors, and Ron touched on that. So it's factors that investors are looking at, and it seems that private equity is becoming more and more interested in those. Some of the things that the NBA offers currently is the fact that they have a global footprint, and on average, their fan base skews younger than the fan bases of the other major sports. meaning essentially you may have a supporter of your product for quite a long time if you were able to hook them early. So private equity has been trying to gobble up a lot of those opportunities that are presented.
And if I can add to that, Lois, what I'm also seeing is that because of something we talked about earlier, because of price point, and I actually tried this, because of price point, what you're seeing is investors doing club deals, syndicating themselves and combining together like you and Rick and I might to put our pennies together so that we have enough money so that we can afford the entry price to buy a piece of a franchise. So I'm seeing more of that happen. For those who would consider that, you know, while that may be an opportunity, the challenge of doing that is most leagues that I'm aware of want one person to be accountable and one person to be the decision maker. And so you have to cede some of your, or you have to negotiate with your partners how you make decision. What are decision rights that you offer to the league as that ownership group? And as you can imagine, depending on the size, temperament, diversity of the ownership group, making those kinds of decisions can be more complicated. But I am seeing more of that, and I think we will see more of that.
And if I can add on to what Ron just mentioned, one of the complications, or two of the complications that I've noticed within private equity investing is, number one, price point, right? Being able to buy at the right price and having the right people negotiate and maybe come in on the lower end, right? And number two, it would be understanding the rules that are set in place by these particular leagues on how they will manage private equity. So for instance, the NBA has a rule in place that private equity cannot own more than 30% of one of their franchises, and no one singular fund can own more than 20%. Major League Soccer has something similar where they set a cap at $20 million for private equity investors. You cannot go over that to invest in any one of their franchises. Major League Baseball doesn't have anything hard set rules, but they are examining each and every one of these opportunities on a deal by deal basis.
And to build on that, I would say that a subtext is that these are not liquid investments. Not unlike any other private equity investment, you're talking about having your capital tied up for a while. So you have to think about how much of your capital do you want in this asset class for a significant period of time as you evaluate the opportunity. Because you're not going to, the liquidity that looks nothing like a NASDAQ traded security.
Okay.
And there's no assurance, despite the tailwinds that we've been experiencing the last decade or three. There's no assurance that the appreciation is going to continue. I mean, I think we're in a bubble in some ways. I think it's got a long tail left, but I think we're in a bubble. So, yeah. with respect to some sports leagues, not all of them.
So turning our focus a little bit on growth and outlook and what's down the pike.
Yep.
Ricardo, what do you see? Sovereign wealth funds, are they getting involved? Who are the new players?
Absolutely. You tend to see that a lot from Gulf nations. Saudi Arabia's sovereign wealth fund was involved in a very hot button topic for the last spring and summer with their Live Golf series. And that's funded by them. And they were able to poach a number of significant players from the PGA Tour with their liquidity and with the money that they're able to pump into their series. They also, it's rumored to have offered Tiger Woods $1 billion. He turned it down. But that just goes to show what type of liquidity they are playing with these sovereign wealth funds. And in 2021, they purchased an 80% ownership stake in Newcastle United Football Club. Other foreign entities are doing the same. So UAE, United Arab Emirates, they own the Manchester City, if I'm not mistaken. Paris Saint-Germain is owned by a subsidiary of the Sovereign Wealth Fund of Qatar. And Bahrain also has a sovereign wealth fund that owns a pro cycling team. So they're very active.
Okay. And Ron, how do you see technology impacting sports investing?
Well, we touched on it earlier. I see the continuing secular movement of eyeballs to live events. And you'll see, with I think Rick touched on Amazon now having a deal with the NFL. You'll see more of that with other leagues. And so you'll see streaming will become a bigger part of the sports business and the economics of the sports business. I think that gambling, which is growing, and many of the leagues are actually participants in the sports gambling industry. I think gambling as a tool for fan engagement will be a factor in valuations for a long time. How much and how fast, I don't know, but I think gambling is an interesting development. When I first bought in 14 years ago, I don't think gambling and sports, you didn't talk about them in the same sentence. They were seen as it was the sports people thought gambling was verboten, but we've gotten over that over the decade. So you can see some of that. I think Rick may have touched on this. The NFT deals that you're seeing, I think that's going to be part as you're bringing the fans, the experience, you're bringing that much closer together. I think you're seeing with social media more of the players being encouraged by their teams engaging with the audiences on social media as a way of increasing audience engagement, building the brand, not just of the franchise, but of the athlete as well. I think that's going to be a force. Some people will win, some people won't, but that's fine. That's the way markets work. So those are a few things that come to mind for me, Lois.
Maybe Ricardo, this is for you. What about women's sports? What's going on there? Is it a good time to invest now?
I think it is. Just this year, the NBA arm, their female basketball league arm, WNBA, had a $75 million raise, which led to the league's valuation going up to $1 billion. That money is supposed to aid in growing the women's game worldwide. And the WNBA, much like the NBA, obviously it's on a smaller level, they have globalization. They have a very good global footprint because of the sport of basketball. And number two, a young fan base that will be engaged, hopefully, for an extended period of time. So I think that now is a good time to invest in some women's sports. And Ron touched on lacrosse, right? So smaller sports that may not be mainstream currently may have an opportunity to be smart investments going forward.
Yeah, I'm in a hotel where there happens to be a sports convention, and I ran into Julie Foudy yesterday, who, as you guys may know, is was captain of the U.S. World Cup, 3 times World Cup and national championship, Olympic champion. And we talked about this a little bit, and I think where Julie and I came out is that you have the eyeballs for women's high-level competition, particularly in soccer and tennis. Those are two sports that come to mind most of all for me. And the tennis folks have been able to grow their valuation pretty well. And it's just a matter of time, like any investment, time frame, expected ROI, so forth, for women's sports to be in the mix with all the other sports that we're talking about.
Okay, again, I'd ask the audience if they have any questions, please send them through chat. There is one question which we did touch on about trading cards and NFT. I don't know if there, Rick or Ron, you have anything else to add?
Sure. I mean, I'll touch on it. I don't know what the specific question was, but that is another arena.
The question is, what do you think about trading cards and NFT trading card investments?
That is an area where you're seeing activity. The thing about sports memorabilia and sports cards and things of that nature, it's always been kind of like a popular hobby, right? And how to monetize it has been somewhat exclusive, right? So you may have a Babe Ruth card and things of that nature, but I have been seeing lately where you'll have people decide to invest in a card of a certain player, assuming that they may have a very big year. And as opposed to it being a long-term investment, it's a short-term investment. So I'll use Aaron Judge, for instance. So if someone were able to get Aaron Judge's rookie card, or if they had it, knowing he'd have a big 2022 season, he's now hit 60 home runs. The value might be the highest it's possibly going to be. They may be able to sell if they had invested in it. Another thing that I'm seeing is that you'll have people that own memorabilia, whereas let's just say it's a Michael Jordan jersey and it's worth $1 million. Some of them are now opening it up to selling shares of that ownership. So they may say 100,000 shares are available at $10. People buy in, and obviously if the value of that jersey increases, then the value of your investment will increase proportionally with that. So I have seen those occurring, but I'd say sports betting is probably second on the list in terms of investing in sports, in my opinion.
Yeah, I look at, I tend to agree. I think trading cards and NFTs, it feels more like investing in Ferrari or sports cars, and they have their own cycle that's not very predictable, that's different from, say, equities or fixed income instruments. I think they have a place in the appropriate portfolio, but I would never count them as the mainstay of anybody's portfolio because of how speculative they can be, and often countercyclical.
There's a question that came in. How reliant is the championship success of a team to increase in their valuations? Does the sporting future of a team remain a major factor?
As far as the first question,
you could start on that.
Okay, that's why the first question goes. I think the championship prospects and success of a team is important, notwithstanding the Cowboys who haven't won anything. But I think
watch it.
And I'm in Dallas, so I got to be careful here right now. But anyway, I think that championship success normally correlates with more eyeballs, with bigger brand equity, that all of which translates into more apparel sales, more ticket sales, more bigger viewerships, all of which are key components of valuation. And so championship success is championship fiber is a factor. I think that Cowboys are actually supportive of that notion despite their last 20 years, because they do still have a tail of championships that very few teams can trot out.
I agree. I do believe the championship pedigree does matter. Obviously, I use the LA Clippers as an example of a team that hasn't won anything, and you're still able to maximize the return on your investment. But generally, having a winner does matter.
But I would hasten to add, though, that there are lots of ways to make money in sports. And I think my preferred way is to have a championship team that has It's building brand equity off that with all the stuff that I mentioned earlier. But there are some people who simply use them as cash cows. Do not invest in big contract with big players, all right? And do not invest in winning championships. But because the cash flow is so strong, they can make money with the cash flow that comes in from TVs, the jerseys, the parking, and so forth. And so, like any investment, some people invest for the coupon, and some people invest for the capital appreciation. And so it's horses for courses. What are you looking for? And most sports people don't think about it, but not everybody is in the sports business to win. There are a lot of ways to make money. Some people are in the sports business to make money without winning. So you don't have to work. You don't have to work as hard to make. You don't have to work as hard if you don't want to win a championship.
Here's an interesting question from Gabriel. We hear about the majority owners of sports teams. About how many owners partners are there on a typical sports team?
Oh, I don't know if there's a typical. I think you have what is typical is you have a general managing partner who's going to have the controlling ownership piece, somewhere between 30 and 60%. I'd say 80% of the time. And then the balance of that is going to be minority pieces that are spread out in various tranches and various sizes. And that majority owner is the one who makes all the calls and shots, and is the one who is accountable to the league of which it's a part. So you're only going to have one or two majority owners, and oftentimes it's a family. You can have any number of minority owners. And so, you're not going to have 100, but you could have 20. Right? Yeah.
Do you think we're going to get to a point where you have these big multi-clubs owning multiple teams?
It's Lois, to answer that question, it's interesting because that's really a relatively new thing, right? 2017, where you're seeing one individual or a fund owning multiple football clubs, whether it is European football clubs or just worldwide football clubs. You've seen Red Bull and City Football Group have shown that there is a way to do it, and it diversifies your portfolio. So I do believe that it's likely that people will follow suit because those two groups have had success doing so. I don't know whether it's one of these things that's going to catch fire and then, within the next 3-4 years, we'll see somebody owning a piece of Chelsea and then another owning a piece of Manchester City. I don't know if that'll occur right away, but in smaller football clubs and smaller leagues, you are seeing it, and the success is there, and it helps diversify the portfolio. So I believe it will continue at some point.
Well, what you have seen, it's a different twist on the same question, is people like Kroenke owning in Major League Baseball and NFL, people like Ryan Goff owning in NBA and in Major League Baseball. Yeah. People like John Henry owning in Major League Baseball and Premier League Soccer. And one of my partners made a bid for Chelsea. So, that's been going on for more than a minute. And I think that's going to continue.
Yeah.
Okay. We have a question from Adrian. What is to be gained by buying a smaller team that has been fallen on hard times, such as Ryan Reynolds' purchase of Wrexham AFC? What's the logic?
Well, I don't know. I'd have to know more. Is the league growing? Are the eyeballs growing? Is the TV contract attractive? It's like any company. Some companies that fall on hard times, or a stock that falls on hard times, is undervalued, and sometimes it's fairly valued. I need to know the underlying facts to know to make the assessment whether or not hard times means a bargain or hard times mean is a sign of things to come. Hard times is not necessarily a good thing. It depends on what the other facts that surround the hard times. What kind of team do you have? What kind of players do you have? What kind of TV contract do you have? What kind of stadium do you have? What kind of parking do you have? What kind of apparel do you have? Those are the questions that I would ask. Falling on hard times means a lower price, but doesn't mean a great value. It just means lower price. And value is more important than price, in my view. Because you're trying to make money.
Another question from Carson. What kind of cash yield can you make on a typical sports team?
What kind of cash yield?
Yeah.
I'm not sure I understand the question. You know, you can live off the annual revenue if you want to. You're not going to live. You're not going to be in top 1%. You can live off the annual revenue. Most people do not rely on sports teams' revenue for their standard of living. Most people, a few do, but not most people. These are highly illiquid wealth building opportunities that will build your wealth, which will not give you an immediate boosted standard of living because you can't monetize it. So I don't know if that addresses, if that's responsive to the questioner's question, but I don't think, very few people that I know rely on sports investment income solely to support their standard of living. That's not, you've already made your money, so you don't. That's not what you're doing. You're building more wealth.
I agree. I agree with Ron, because I think we touched on the fact that generally these are long-term investments. And so a lot of your returns are unrealized. I mentioned Ted Leonsis and the amount of money that he has in unrealized. I mentioned Jerry Jones, bought it for 150 million. It's now valued at 8 billion. It's unrealized. So generally these are long-term investments.
Okay, we have a question from John Watrous. If you were to pick 3 high opportunity sports, what would they be?
I don't know. It depends on the price.
Yeah, price point. Absolutely. Everything. For me, I'd probably say NBA, NFL currently, and Ron may be absolutely correct regarding the bubble that we may be in. And the third would likely be owning a football club, a European football club of some nature.
Yeah, I would add in there maybe the NHL.
Yeah.
I would add in there MSL soccer, and I'd probably add in there minor league baseball, NHL. That's probably it.
Good. Okay. So
And the NBA.
the last question. Okay. Last question to both of. Having gone through, this discussion and your experiences, what's the best advice that you have for our listeners, and or lessons learned? What should we keep in mind? Ricardo, we'll start with you.
Sure. Staying on top of whatever, it's like investing in anything else, right? You have to stay on top of that sector and understand that sector thoroughly before you decide to make a plunge or make a dive. Number 2, you have to understand price points, right? What is the lowest amount of money that you have to have in order to purchase? Can you find people to partner with and pull your money together to reach that lowest threshold? Another thing is, what type of representation will you have? Right? You got to have the right people. Ron mentioned earlier, Ron is an attorney, and a great one at that. And when it was his time to make a purchase or join an ownership group, he went and he got the right representation to help him negotiate that particular deal. So those would be the things that I would point to.
I would say, Lois, I agree with everything that Rick said. I would say that there's a temptation to see investing in sports differently than other assets. I wouldn't do that. I think diligence is required. Who are the people? What are the prospects? What are the growth levers? In this case, it's going to be eyeballs, TV contracts, merchandise, real estate. That's all there is in sports. And how do those add up to the valuation? And how does the current valuation compare to the intrinsic valuation that your valuation formula comes up with? If you can buy it at less the intrinsic value, you make money. If you buy it more, you better hope it appreciates. It's not different from buying. It's equity. It's not different from buying any other piece of equity.
Yep.
Except it's illiquid.
Okay, well, I would like to thank both Ricardo and Ron for a great discussion and the audience for their questions as well. And a very special thank you to our sponsor today, Ballard Spahr. And we hope you enjoyed the program, and there's a recording of it, which we will be putting up on the Peltz International website. So thanks again, and look forward to seeing you soon. Thank you.
Thanks, everyone.
Bye.
Thanks, everyone.